hearty good morning once again to all of you. We've had the last 2 days with power-packed discussions, exciting insights over various engaging formats in the last 2 days. As we enter the third day of the Emkay Confluence, also the final day, we start the day today with a discussion on the evolution and roadmap of the MFI sector in the coming decade. As of March 2024, the AUM of the microfinance industry touched rupees 4.3 trillion, the sector serves over 150 million active microfinance loans, 40% of which are done by NBFC MFIs, 33% with banks, and small finance banks account of about 17% of the total microfinance portfolio. As with the demand in growth and a positive outlook, the sector enters a robust growth phase. Now, this phase brings a lot of opportunities as well as challenges, and to decode the future of MFI in the coming decade, we have a power-packed discussion again today with distinguished panelists from Microfinance Institution Network and Credit Access Grameen. I'd like to call upon stage with great pleasure Dr. Alok Misra, MD, CEO and Director of Microfinance Institution Network. Dr. Misra comes with 28 years of experience in 32, all right. I'm sorry, sir. I'll correct my records also. So 32 years of experience in policy design analysis, implementation and evaluation over 22 countries in Asia, Africa, Eastern Europe and Central Asia and the Pacific. Microfinance Institution Network, the work is organized over 3 sectors or 3 themes or verticals. That's policy advocacy and knowledge management, state initiatives and SRO with communication supporting the theme. Welcome on stage once again, sir. Next, I'd like to call upon Mr. Udaya Hebbar, MD of Credit Access Grameen. Mr. Hebbar is a veteran in the microfinance industry. He's been the architect behind the transformation journey of building Credit Access Grameen brand as a leading microfinance institution in India. A seasoned banker for 35 years, sir? 35 years? 38. A seasoned banker of over 38 years. He has held several leadership positions, which includes, that's before Credit Access Grameen, includes being head of commercial banking and payment operations at Barclays Bank PLC. He served a decade each with ICICI and Commercial Bank. Mr. Hebbar also serves as chairperson of the Microfinance Institution Network. Sorry, sir? Change ho gaya. All right, I'm so sorry, I was not aware of the change. Welcome on board, sir, again. And to moderate this session, may I request Mr. Anand Dama, our banking sector lead, who comes with over 20 years of experience in the BFSI, which includes stints at CRISIL as well as ICICI Bank. Anand, welcome.
Hello. Yeah, thank you. And, so we are pleased basically to have you on board for this panel. We are honored to have, such a distinguished panelist with, Credit Access Grameen being one of the largest NBFC microfinance player on one side, represented by Udaya Hebbar, sir. We have seen the Credit Access Grameen performance. It has been outstanding across the cycles altogether. On the other side, we have Alok Misra ji, who is the MFIN MD and CEO. We know again that basically MFIN is an SRO, been recognized by the Reserve Bank of India and has been representing the MFI with the regulator. They have been dealing with a lot of the MFI players, and on a regular basis, basically, they have been advocating what basically needs to be done, and they've also dealt with the policy decisions, particularly related to the microfinance institutions. MFI sector has emerged as an important sector worldwide, not only in India, improving the financial well-being of the bottom of the pyramid customers and making them bankable. We have seen a lot of microfinance players converting themselves into SFBs and even the universal banks as such. It is also heartening to see the father of the microfinance, Mr. Yusuf, now being hoisted as the interim Prime Minister of Bangladesh. That's certainly a moment of honor. Now, so let us begin with the fire chat session, and where we would want to basically discuss what could be the growth opportunities that we will see basically for the microfinance sector over next 10 years. Along with that, there are a lot of challenges that basically the sector would be facing. We have seen multiple cycles, particularly in terms of microfinance. So my first question is that the MFI sector AUM is currently at about 4.3 trillion in the INR terms. How do you see the MFI sector evolving over next decade in terms of growth? What is the right growth rate, which is basically a digestible growth rate for the industry? Because we have seen multiple cycles, where the asset quality issues do pop up. There are other external challenges that we tend to face. And how basically the sector should plan to manage the potential challenges, particularly on the climatic changes that we're going to see, and also the overall political environment. Over to you, Alok Misra, sir. Yeah. So first question is to you, sir.
Thank you. Thanks, Anand. Thanks. I think your question has two parts. One is what is the runway, market size, and second is what is the sustainable growth percentage. On the market size, let me say that today we are at 4.3 trillion, and the market size usually, because every year we come out with a analytical report which is called Micro Matters Macro View, and there we try to see that what is the potential based on various other macro data. And last year we had assumed it, worked it out at 13.5 trillion. So that is a lot of runway. We are still, we say, at 32-35% saturation. And the empirical evidence of it comes from the recent Government of India's data on monthly per capita expenditure, and I think it came in May. And monthly per capita expenditure, though it is monthly per capita expenditure, but with certain extrapolations, you can work out monthly per capita income also. With that, if you see that around 80 to 85% in both rural and urban put together is the microfinance market. And when I say market is households with income less than 3 lakh rupees. Okay. So the runway is huge, and we see increasingly as the structure of the Indian economy is undergoing change, and the demand for microfinance and loans is increasing. But on a macro side, if I look at it, the increasing demand and 85% of population being microfinance client is not a good factor for the economy, because that means they are not graduating up or better jobs are not available in the market. So not good for the macroeconomical structure part of view, but from microfinance growth perspective, there is enough room for growth. So at present, I say around, on a conservative side, we are at 40% penetration, so there is enough runway for growth. On the second part of your question, that what would be the growth percentage which is ideal? No? Well, you can't say anything ideal because an institution of 2,000 crore can grow up to 2,800 crores by next year. An institution of 25,000 crore possibly cannot grow up to 35,000 crores because there are limitations to it. But generally, if I look at last 15 years trend line and wherever the events have happened and all that, I think anything between 18 to 22 seems to be a fair for the integrated entire sector as such, because then people will say that why not 30 and why not 15? So the thing is that there is no fixed number, as I said, institution-wise, but there are three things, that what is your capability, your training capability, your control processes capability and all that. So the back testing of the data shows that at least 20%, 18 to 22% range is sustainable, and sector has not witnessed any upheaval in that. So these were your two questions?
Yeah. Yeah, mainly these were two questions. But, for example, like, we have seen the banking sector again, they tend to tell us that we generally would want to grow at a certain rate, like, if 7 to 8% is the GDP growth, then we would want to grow at about 1.5%. The microfinance industry also has now evolved, matured a lot. There are few states where basically the microfinance players do not want to go, and then there are few players where basically there is a lot of concentration that we see, particularly the state of Bihar, UP, Tamil Nadu as such. There are new geographies which are developing, but then they also have their own issues in terms of, the initial phase of the customer indiscipline that you see. So in that context, do you believe that 18 to 22% kind of a run rate is good for next 10 years to go for? Or you believe that the earlier phase basically will have a relatively higher growth run rate and then it should settle somewhere closer to about 12 to 15% kind of a growth rate?
I think I will go with what I said earlier, 18 to 22. And why I say so, first of all, we have done 40% saturation. There is enough market. And you rightly said in certain pockets, there is saturation. But there also, if you see, the same saturation part was also, the logic was similar in 2022 also. Now, post 2022, the sector has added on, I think, 1.6 crore new clients, new to credit clients. So growth has not come from lending to old clients, from new clients. But even within districts where there is concentration, I would see that there are various pin codes which are not attended to. If you continue to lend, if we continue to witness the phenomena that in same places 22 or 25 players are operating, there will be problem. If growth is coming from there, because absolute number criticism is not okay. I say the nature of growth has to be broken into. You have to see from where the growth is coming. If it is coming from less penetrated areas, unpenetrated areas, new to credit clients are growing, 18 to 20% is sustainable. If it is coming from same areas where there are 25 to 30 players already operating and the district itself has a portfolio of 3,000 crore, 4,000 crore, I think that's not good. So it has to be further broken down. The generic statement like that whether 10 is okay or 20 is okay, I would still go by 20.
Sure. See, another basically part of the question was that the climatic risk. Now this is basically becoming an every year phenomena where you have floods or you have storms, and basically the every now and then basically most of the states are witnessing this kind of climatic fluctuations. What as an MFIN basically is advocating to basically the MFI players in terms of making some additional provisioning? Do the underwriting standards have to undergo any change? So if you can basically throw some light on that, and then basically even Udaya sir can add on that part.
So see, no doubt the climatic events are increasing and climatic extremities are increasing. Number might be same, but the extremities, like in a day the rainfall will be beyond record or drought will be of record. So for that, see, there are two things which financial institutions can do. And one is like in banking terms, which you rightly pointed out, is creating a counter-cyclical buffer on the capital. So on the capital side, on the first side, we are not doing anything much because the NBFC's regulatory capital itself is currently now at 15%. It is already high. And if you see the players, the top 10 players or top 15 players, the capital adequacy ratio will be 20% plus. So there is not much scope to do counter-cyclical buffer on that. It's already there. Much more than that. For example, in Basel also for banks, it is said 1.5 or 1 as counter-cyclical buffer. So we are already far ahead of that. Second part of it, what we are doing, so we are now in the stage of rollout. Pilot has been completed. We are trying to do, first is, there are two elements which you mitigate such a risk. One is climate counter-cyclical buffer, which I already explained. And the second is the risk mitigation measures. Now in risk mitigation measures, for last 3 years, we have been working on a natural calamity insurance product. Parametric insurance, which globally is called, and where major perils like drought, flood, rainfall, and all are covered beyond a threshold, empirically measured. So pilot has been done. Now we are in the stage where we are trying to roll out in a few states in this year. And so the basically product has been designed because we have to keep the cost high, cost low. So what we have said is that such extreme events generally disturb the income flow and repayment capacity for 2 to 3 months or 4 months. So with that minimum premium we are trying to work out, wherein the 4 installments can be covered or 4 months can be covered. So that will be rolled out this year. I think with these two things, the measures which the industry can take will already be put in place. But for our clients on a broader scale, whether you talk about for country as a whole to go towards net zero target and all that, the irony is that our sector clients are such, who face the consequences of our actions. They are not net contributor to climate change, but they face the effects of climate change. But still, as I said, these two things, we are trying to do it. I think if the natural calamity product is bought in by the institutions who are doing it, because a lot of effort has gone into it, and that will provide a lot of relief. That will mitigate the climate change stress to a large extent.
Yeah, Udaya sir.
Just want to add to what Alok sir said about the growth. I just want to add, one is he asked about sustainable growth. So long the growth is driven by customers, so long the growth is driven by infrastructure growth, which is commensurate with the customer acquisition and the portfolio, I think that is sustainable. When Dr. said between 18 to 22, at least 10 to 12% customer growth should happen there. Then it is more sustainable. It should not be leveraged on the customer. It should be driven by customer. And with the saturation is just around 40%, there is enough opportunity for adding customer and growing. So which should be the reasonable sustainable growth for the next decade. That is what one thing. On I think the climate change, definitely a lot of measures being taken by MFIN. They have been testing this. So we have been observing this last year, whether it's because of El Nino impact, the low rain everywhere. That is one impact. Now we are seeing a lot of floods everywhere. There is another effect. So long these are not long term, so impact is quite low. If the flood is for 2 days, 3 days, 4 days and subsides, no issues. Flood sustained for 20 days in a place, then you have an income impact on the whole system around that place. That is where this kind of insurance helps to actually cover their income. So if you are able to cover them for 2 months, 3 months income with what they have to pay, that will be the definitely counter-cyclical for that kind of events. So with the measures which is initiated by MFIN, by a pilot, is going to help a lot.
Sure. So you touched upon till the time basically the demand is there from the customers. Now, when we talk about again the 18 to 22% kind of a growth, what kind of a customer growth that you build into that, and what kind of ticket size growth that we need to have? Because if you look at last year, there have been talks about that particularly post-COVID, we have seen a significant rise in the ticket size rather than the customers as such. So again, what could be that customer growth rate that basically one should look at if we need to have a digestible kind of a growth?
I think post-COVID, it's only for the initial few 1 or 2 quarters you have seen the growth because the pent-up demand was there. Probably industry has not lent to the customers initially. Otherwise, what he said is 1.6 crore customers grown during this period after the regulation, after the COVID, which is quite robust. Which was otherwise, if you go back pre-COVID, we didn't have that kind of customer growth. It was less customer growth. Whereas now, after the harmonized guidelines came in, I think ability of MFI players to price it properly and also go into deeper in the districts where they do, earlier it was not cost effective for them to go. Today they are able to go. That is why I think which really helped the sector to grow into the districts where earlier they were not able to go. Now they are going deeper in the villages. Earlier they are not able to go. Today they are going. Therefore, I think we have seen quite a robust customer growth in the last 2 years. I think percentage-wise, I don't know, maybe 10 to 12% customer growth or more. Because, last 2 years, 25% customer growth, almost good customer growth. 1.6 crores over 7 crore to 8.6 crore in the last 2 years. It's quite a good customer growth, which is happened after the COVID. Only initial 2-3 quarters, we have seen the leveraging, because probably industry has not lent during the COVID and then they started renewing their loans. Therefore, you would have seen quick disbursement to the existing customer at that point of time. Otherwise, we're not seen leveraging on the customer at that point of time.
Sure, but then when we look at basically, RBI, they have been talking about there is a lot of customer over leveraging. There is also rising customer discipline that a lot of lenders speak about. But on the other hand, basically, we are also seeing a lot of unhealthy competition being done by the lenders themselves. We have seen multiple loans being given to a same customer to the extent of about 4 loans, 5 loans, 6 loans, 7 loans. And then basically lenders tell us that, when we had given a loan, basically the customer just had about 2 to 3 loans. But in a year's time, basically there are about 3 to 4 more loans basically that he has taken. And there is very little that basically that lender can do because he had practiced a good lending practice that at the time of evaluation, but then some other lenders basically have come and he has given loan to that customer. So again, there is one more issue that for past 2 days, a lot of microfinance players were there that everybody, the investors are actually asking, is that there is a lot of this inconsistency in terms of NPA recognition as well. So one, we have a problem of this customer over leveraging, the lending practices, and then there is basically inconsistency in terms of the stress recognition, which we have seen across MFI players. So first question is to MFin, how are you looking at this aspect, and any advice that basically you will have for the MFin players as such, and any discussion that you have also had with the RBI in this regard?
See, it's a very valid question, and what I say is that if everything would have been perfect, if the bureau system would have been perfect, if the client identification would have been perfect, there is no scope for this happening. Why so? Because the RBI regulations itself says that the repayment obligations should not exceed 50% of household's annual income. And the household annual income maximum can become how much? 3 lakh rupees. So repayment howsoever number of lenders lend, but the repayment obligation of the household should not exceed 1.5 lakh. But why it happens still is because of 2 things. One is that the client ID through which the CIC is checked, that differs. Though we have said that to our members that because you cannot use Aadhaar had become robust, but now after the Supreme Court judgment you cannot use it. Now if somebody uses voter ID, we have said voter ID has to be used because it is the most commonly available. Third is PAN, and PAN is not there with majority of clients, so voter ID. Now in case of voter ID, while you can verify from Election Commission's website, what happens is that voter ID, there is a client, we find a client having 3 voter IDs. All 3, if you verify on the Election Commission website, all 3 will come as valid Election Commission IDs. So if I put A ID, I get 1 report. The lender which second goes in, puts in B, gets another report. So that is why it is happening. But despite that, that is one part, major part of the problem. And second part of the problem is, some might not take entire obligations which are, because the rule is you have to take both the microfinance outstandings, you have to take the retail outstandings, total it, and then see the repayment obligation. Some might not see retail and lend it. But it is a violation of regulation basically. Now on both these counts, we have worked on extensively on it, and let me tell you the steps which will reassure the industry. One, on the ID part. So we have come around to the part that while voter ID verification and all that is fine, there is no way to substitute Aadhaar. So now RBI has also gone and spoken with the UIDAI, and they have said that okay, if all the entire digits of Aadhaar to be given, at least the last 4 digits can be shared and stored by the CICs also. If because last 4 digits are not singular to one person. Because maybe 30 persons will have same last 4 digits. But if those last 4 digits are combined with other things, like name, village and all that, the accuracy match will go up to 99%. We are hopeful that in next 3 to 4 months that will happen, that will solve that problem. On the second problem, that lenders doing exuberance and trying to game the system sometimes, what we have done is that number one, because our members represent 92% of the sector, you would have seen that in July, 8th July to be precise, we have issued new additional rules, because RBI regulation is one, then there is industry code of conduct. Now, based on field practices, we issue an additional guardrails. So on 8th of July, we had issued two important parts of the guardrails. One is that for an individual client, nobody, all lenders put together, the loans should not increase more than 2 lakh rupees. All lenders put together. So that is one of the most important part. And second, again to curb that, we have said that to one microfinance client, more than 4 lenders should not lend, including the lender who is going to lend. So at a time, there could not be more than 4 lenders. But then the logical question from your side would be, then how are we going to ensure that this is happening? So let me assure you that every quarter, we take quarterly adherence report. When you become MFIN's member, we take your board resolution on it that you authorize us to take quarterly adherences from the CIC. So we will see that, suppose for example, July to September quarter, for each institutions, how many loans were disbursed and how many violated XYG conditions. And those who have violated will be put under the Self-Regulatory Organization Committee's enforcement framework. So we are trying to plug both the gaps to hope that nobody games the system. And if Aadhaar thing happens, hopefully it will happen in 3 to 4 months, that will solve the majority of the problem.
Yep. Udaya sir, you have any comments on the same?
No, I think, these guidelines are most important, as well as the industry player came together and accepted to do it. That's most important. Earlier, MFIN used to represent and cover or govern only NBFC MFIs. But last year, the achievement of bringing everybody, whether it's NBFC or SFB or a bank, everybody under the umbrella of MFIN is one of the big things happened. It is no more microfinance institution network, it is now industry network. So 92% of industry, when you say it is including everybody. That is one. Two, all of them are part of the decision. So therefore, high acceptability within the whole lender system, which is also very good. Therefore, we believe that this should be taken right spirit, and most of them will follow this. And then to add one more thing, even 2 years back or 3 years back, there was no regulation of the new one. We had at least 4% of customers are more than 4 lenders when the limit was less, and at least 4.5% of customers have more than 1 lakh rupees outstanding or 1.25 outstanding. So today that has moved to 8.5%, 4% more than that. So the breaching was there earlier also, but it was not very high. It's actually moved to now about 8.5%. Yeah. So we believe that with these additional guardrails, I think we should be able to bring back the system in control. And MFIN's continuous monitoring, tracking through bureau, maybe MFIN will report to my board tomorrow if I breach, correct? So that kind of steps will definitely help us to bring back to the basics. I think that would help us.
Now, the question that comes from this is that, and again, that's been discussed about for 2 days, is that when the lenders tend to pull the plug, either they basically cut down the exposure to some borrowers or reduce the limit as such, can this have a cascading effect leading to an asset quality issues there, because customers now have got that loan, right? How are they going to repay back, even if basically we are going to impose these restrictions, and whether this could actually trigger altogether a new NPS cycle, particularly because of the pulling of plugs by many of these lenders. So, what is the thought process over there, particularly, I'm sure that you would have discussed these issues with the MFIN players, lenders as such.
See, as Udayji was mentioning, when we look at data, the clients having outstanding more than 2 lakh rupees, where the plug has been capped, are 3 to 4%. So I don't think it is going to have any significant impact. And suppose the outstanding was 3 lakh rupees. Now, it will not immediately come to 2 lakh. The client will repay the earlier loans, and gradually, After 1 year, when the cycles of loans will come for renewal, it will be capped at 2 lakh rupees. So it will be, first of all, the number of clients affected by it is smaller, though it becomes larger when we talk about incidences. And second is, it will happen over a period of time. And then gradually, everybody will realize that 2 lakh is the cap beyond which you cannot go. So I don't think it will cause any major cascading effect or whatever you call it. If it would have affected, say, 20% of clients or 15% of clients, it can have some snowballing impact. But I think it will signal in the field that the institutions are becoming disciplined and there is rationing of finance. There is no free flow of money, because we always tell our members that money should not chase people, people should chase money. Moment institutions, money starts chasing people, there is a disaster around the corner. And if that message goes, I think, because I will tell you from practical example, people take it on their face. Because 10 days back, I was in near a place in Mathura, and an institution's client addition process, group formation process was going on. And when two there on the tab, the BRE checks, they said that आपका cross हो गया, bureau में cross हो गया, red. So the client initially made some noise, then she understood, and we said that आपका income इतना है, इसमें आप कैसे इतना लोन ले सकती हैं, आपका तो problem हो जाएगा. So they understood it, and later on, casually when I talked to her, they appreciated. So on field and all that, it will be gradual, and I don't think it will cause any cascading impact. That is my reading.
Yeah, I just want to add to what Alok said, why it should not get cascading. So let us assume that there is some percentage of more than 2 lakhs, some percentage of more than, some percentage more than 4 lenders. So this is what we are thinking about over-leveraged system, over-leveraged book. If I understand, let's assume that total 10%. Okay. So, do all these 10% is going to default tomorrow? My answer is no, because largely these are the customers who are high vintage or a high cash flow. Because every institution would have made some checks before doing. Let's assume that maximum, in my own, 10% of them will default. Let's assume 10% of the 10% will default. What is the impact on the system? It's just 1%. So, my sense, we should actually go with the calibrated way of managing this issue. Even that 1% is an issue, but I think we should take that issue so that for a future, when you're talking about next decade, these are the steps are important instead of leaving it for open. So, I think, when some big decision happens, there will be some impact. There will be some impact. We can't say there is no impact. There will be impact. But if you look at the larger picture, it's a small impact. So that can happen. Even today, I think we are normally calling out microfinance. If you call out the retail, also we have the same issue today. Right? Retail or individual loans or unsecured loans, non-microfinance also have some issues today because of this, curtailing the growth. Will have impact. Anytime when you start curtailing the growth, will have small impact. I think my sense it is not very large, manageable, and we should be able to handle it well.
So again, related to that is that the larger problem is you talked about is that the multiple microfinance loans to these customers, but now we are also diversifying a lot into other segments. There are a lot of larger banks, the NBFCs and so SFBs basically trying to cross-sell other products to them as such. So I don't know whether the MFIN or basically the microfinance players are looking at the overall customer leverage, including the other loans or basically the non-microfinance loans. Because if you're trying to bring down the microfinance loans from 3 to 2 lakhs, it might to some extent solve the problem for microfinance loans. But then there are other loans that these customers would have taken. So how at the MFIN level and particularly at the CREDAC level you are looking at that aspect?
You see, the current regulation is not actually focusing only on microfinance. It's actually family. Any borrowing from the family to be treated as total borrowing, and outflow of the family for the loans to be treated as outflow. So if you really cover that kind of in your governance and credit policy, this all what you said will get covered. So if you are not able to do, maybe some of them yet to start doing that, you need right technology, you need right process for that. Some of them may take some time, but if they cover the family income and family obligation, I don't think it's an issue. But if you go back and check the data, I think there was a report from CRIF some time back, which talks about 25-30% of the non-microfinance in the family, which largely a gold loan actually. Largely it comes gold loan, which normally we should not worry about it. Normally it's only the interest payment is the obligation. So normally they renew it. Other than that, if you check, it is not very large. Housing or other things are very large. We saw the two-wheeler, what is it? It's about 2 to 3% of two-wheeler. It's not very high actually. So the larger other loans for a microfinance customer is gold. It is high in south, low in north, that's correct. But that should not be a big obligation for them because it's completely secured by gold and normally interest paid out and renewed. So the obligation is only interest for them of the year. So we are not seeing too much in the microfinance customer segment, this kind of loan. Family, yes, we have seen some, but largely two-wheeler, gold, all those things are in the family members. But obligation perspective, we are supposed to take the combined credit report and check the family and then take the decisions.
Sure. So when we look at the states, I think RBI also talked about curbing the exposures, particularly in the state of UP and Bihar. Now these are two very high growth states for the entire microfinance industry. So what is the thought process over there? Why basically you believe that RBI has been talking about that? And even if you look at, I think the Utkarsh has been growing at almost about 30%. And about 60-70% of the loans typically come from these two states as such, and they're still talking about growing at about 30%. So do you believe that all these growth that we're talking about possibly will come down because of whatever RBI has been talking about, number one? Number two, we have elections in Maharashtra sooner, and the way basically government is doling out the money, there is a chance that basically there could be a farm loan waiver in the state of Maharashtra. We have already seen 3 loan waivers in the state of Maharashtra in almost a decade. So that is another risk that we see for the state of Maharashtra. And next year again you will have elections in Bihar, which still now has not seen a loan waiver, but possibly this time around political compulsions might make it happen. So on these two aspects, what is your thought process?
First of all, let me clarify that RBI has never said Bihar and UP there is a problem. The money control has said it.
Yeah.
So let us leave it there. So it is money control's imagination which has triggered the story, and we have asked money control also that please identify the source from where you have drawn the report, and they have not replied to it. So I will stop there. But on case of UP and Bihar, especially eastern UP and Bihar, because the portfolio is large, so this question is normal. But let me tell you that I always answer this, and Reserve Bank, when I have informal discussions or formal also, this question is asked. So they say that even other states will be asked, but UP and Bihar also. That why so much and all that. Banking sector is not much there. So I say the question which you have asked, the answer is there. Because the banking sector is not there, microfinance is there. For example, Northeast. I said every SLBC meeting when we go in Northeast, there is question is asked that why banks are not lending. But microfinance before Assam happened was lending, and even now they have started lending. So I think it is a good thing that we are plugging those gaps. And in Bihar and UP, you also have to see in last 10 years, the stability of governance has also been there. The improvement in law and order has been there. So the demand is more. And in Bihar, while it may look as a poor state, the lot of role, and Eastern UP also, the lot of role which remittances play, that is often ignored by that. But yes, again, not only in Bihar and UP, in many other states also, there are districts. For example, I think if in my mind comes, if I recollect the data, Samastipur, well, too much of money in a district, by any yardstick, it looks that यहाँ पे अब थोड़ा रोक लेना चाहिए. So that caution we are already giving. But other than that, to level whole state, I don't see any issue. On the loan waiver side, see, loan waivers in last 10 years, I don't see they had any impact. For example, in recent last 2 months back, Chhattisgarh, I think it was Chhattisgarh government or Jharkhand government. somebody tried to do something like that. They had issued an administrative order, and something was done also in Andhra Pradesh, but there has not been any impact because people now have become, borrowers have become mature. Even if it happens in Maharashtra, that will be a farm loan waiver, and hopefully it will only be restricted to cooperatives, which is under state control, because I don't think Maharashtra government has the resources to do a RE-based loan waiver, wherein banks and other things also have to be compromised. So I don't see loan waiver as an issue. See, loan waiver, unless announced by the central government, which can become a little much problematic. State governments, cooperative-based farm loan waiver is not much of an issue.
Just want to add, it's normally a crop loan waiver. When they say farm loan waiver, it's a crop loan by the state cooperatives. So at least for so many years of my experience, I have seen only that. And it never impacted significantly for any microfinance so far because customer knows, largely they know that this is not applicable to them. And then MFIs are not giving crop loan or farm loan. So therefore, we have not seen an issue there. And about UP, Bihar, as I said, as Dr. clarified clearly that it is not RBI. But there is one thing we have to understand, all of us. MFIN publishes something called radar. No? Radar means where they identify the red part of the potential issues, the district which they feel that maybe over leveraged, maybe there are a lot of ringleaders there are a lot of issues there. So we all have every district, every state, they keep evaluated. For example, I observe some problem in a district, I can upload to radar that there's some red flag here. So like that, every place. And this is publicly available for all of us to download and map to our credit system. So there is another self-control we are using, all of us are using, which, let's say, what he said, Samastipur or some part of Gorakhpur. We've seen some cases. The MFIN's radar clearly says, careful here. So there is red flag here. So we keep tracking that also. In not necessarily only in Bihar, it may be in some part of Tamil Nadu, maybe Kerala, maybe Gujarat, Rajasthan, everywhere. They keep, wherever the members observe a problem, we have ability to upload, so that it is available to the entire platform. So that's internally we manage that risk also. It's a risk dashboard. Every month they publish the whole team also, whole membership also. So I think there's a good control we have internally there.
Yep. Now I think we can take some questions from the audience. So yeah, anyone has a basically question, please raise your hand. Someone can just pass on the mic.
Yeah, hi. My question is on the customer and the loan growth. There was a question already asked. I just want to share some of the MFIN data. So if I take the last 7 years, unique borrowers growth was 7%, and loan growth CAGR was 22%. Even if I take the last 3 years, that number is 9% customer growth, and the loan growth is 18%. And this is something which RBI has also highlighted in a different forum. The governor, in one of his speeches, mentioned that during their evaluation of various banks and the audits, they came across various ways of hiding NPAs. It was not specifically to MFI, but he highlighted giving more loan to the same customer as one of the ways which they are concerned about. To me, this looks like a classic case. Plus, what happened to Fusion a few days back, in their conference call, they highlighted about 30% of their customers had more than 4 loans. Some of them even had 7, 8 loans. So when you see all this, I'm just wondering if there is a need to, control the risk of the industry. And how does that happen? Because, every 4 or 5 years we see a accident. And this to me seems like a classic case where accident is waiting to happen.
So first I will start from the last part of it. When you say every 4 or 5 years we see a crisis. So you are referring to 2010, you are referring to 2016, you are referring to 2020 to 22, COVID. Any of the 3 crises were brought about by the sector or by external events? All 3 by external events. 20 Corona, COVID, 2016 demonetization, we didn't do it. 2010 AP Governments Act, which has been now been challenged and defeated. So it is not brought about by the sector. These are all external events which affected everybody. Now on your question of, you said that if I see it from last 2 years, 3 years also, the client growth, client accretion is 9%, and the loan growth you said is 18%. So, I cannot find a disconnect in that, because if the 9% or 10%, whatever that figure comes to, the new to credit clients will already have a lower loan, of course, because they might be 30,000, 35,000, they will start with it. While the clients who are in maturer cycles or fourth or fifth cycle, their loan sizes will be higher. So even if I add 10% new clients or 15% new clients, 85% are old clients. So growth rate cannot be equated that NTC growth is equal to loan growth. It will always be higher. Now on your question of evergreening, because you raised about evergreening. So evergreening, if giving loans after loans is the evergreening, because I have given a loan of 52 weeks or say 104 weeks in case of monthly 2-year loan, and after 100 installments he has paid on time. I have 1 or 2 delays in between, but he paid. Nobody renews the loans to a default client. So 100 installments he paid, maybe 3-4 loans before that it is closed and a new loan is given. If that is what is called evergreening, and people are so worried about it, because he has already paid 99% of our installments, then a loan has been given. It is not evergreening happening at 50% of loan cycle or 30% of loan cycle. But nobody talks about, which I see is not evergreening. There might be isolated cases, because it is already paid 99% of installment, but nobody is worried about that every year 16 lakh crore or 15 lakh crores or more than that, I think around now 20 lakh crore of crop loan disbursement happens by banks and other things, Kisan credit card. And every time no money comes in, it is a cash credit, it is always automatically renewed, it is like a credit card limit, only interest portion is repaid back. So this duality of approach, when you are talking about 20 lakh crore, even if money doesn't come back and it is renewed is fine. Here if 99% installment comes back and even then I renew, it is evergreening. This I am not able to understand.
I just want to add, what you said is resonating about what I said. Earlier, the regulation was that I can charge only 10% over cost of borrowing. I didn't have ability to explore more in the hinterland to go and do my business. So probably, I'm giving as an industry. Therefore, I was not trying to add more customers, instead I was trying to over leverage, for example. Therefore, if you see earlier, pre-COVID or till the new regulation, customer growth versus the portfolio growth, there was little gap. But still, we always believe that 15% variation between the customer growth and the portfolio growth is acceptable, because you have 30 to 40% renewals in your book. So even if you, for a 40,000 rupees earlier loan, you will give 60%, you actually increase by 50% to that customer. So there will be additional growth coming from a renewal. But here you are talking about 9%. So even that 9%, if you see last 2 years, it is not 9%, it is more customer growth. I said earlier, the first 2-3 quarters, probably it's more about post-COVID pent-up demand they used, because during COVID, we are not dispersed. So, or less dispersed, then after COVID, people dispersed. After the regulations, actually customer growth gone up. That is where 1.6 crore customers got added in the last 2 years. So now it is more of a customer growth driven, customer growth driven the portfolio growth right now. It is difference of 10 to 15% will be there, depends on each customer cycle. For example, somebody has high customer retention will have a high growth from the existing customer. Somebody has low customer retention high customer retention will have a lower growth from the portfolio renewal growth. So there will be little variation, but overall about 10 to 15% variation should be acceptable in the business where you are renewing. The customers are moving to the next cycle. When they're taking 40,000, next time they know that I'm able to take little more and pay. So each year, each cycle of their growth, they want little more money than the earlier, because that is where they're going to the higher cash flow bracket. So I think there's no disconnect actually what you said.
Thank you. Yeah, next question.
Hi, should I go?
Yeah.
A related question only. Could you also give us some insight on rural incomes and the stability of rural incomes? Because whenever we think microfinance and climate and politics, we think it's going to be unstable. So, A, are you seeing incomes growing up meaningfully, and which is why the loan size is also increasing, number one? And number two, is the stability of income so poor, or is it just overhyped?
See, the stability of income, no? Rural wages, how it is going up and down. Well, that the only source we can have is the government data. And if you look at the government data, it shows that the real wages post-COVID have, in last 4 or 5 years, if I am not correct, they have grown up only in real terms by 1.5%. That is roughly the data which is coming around. It has not grown much, but whether that is causing stress, because see, there are two factors into it. One is while real wages have not gone up. Second thing is how much is the economist here will understand that the capacity of us as a country to assess informal incomes is also very poor. The data sets which get into the feeding of the contribution of informal sector and growth of wages and for salaried class and all that, it is fine. But for all these sectors, how much the data is reliable, that is also not correct. But compared to what we have seen in last 3 months, as you all know, there have been some slippages in the credit quality. So we really want to assess it, and we cannot do a census or a large-scale survey to give quick results. So what we have designed is, I think in 10-15 days it will be completed. We are talking to 2,000 clients, our customer care executives. We have a detailed protocol to understand what is happening in rural incomes, whether there is a stress, whether it is hyped up, or what is happening, what is about, some people are talking about heat wave impact and all that. So all those we are trying to measure up. In 10-15, maybe a month, I will be able to give a more answer. But on macro level, yes, your point is correct. The government data is the only source, and it shows that the wages in India have grown up in real terms by only 1 to 1.5%.
I think, what is the growth we had in the customer's average outstanding? Just wanted to, the trajectory if you see. When in 2011-12, regulator came and said maximum loan you can give is 50,000 rupees, if I remember correctly. Average outstanding was about 16,000-17,000, the whole industry. When they moved to 1 lakh rupees, or 1 lakh rupees, then it moved to some 30,000-35,000, average outstanding. So from 2012, 11-12 or 15,000, today we are at 52,000 rupees after 12 years. I'm not seeing that is so high in an increase of the overall outstanding. Yes, we have outliers of 4-5%, but if you see industry, almost 40% of customers are more than 3 or 4 year cycles. Even our own data, Credit Access Grameen data, the customer with less than 3 years in the vintage of with Grameen, we saw outstanding average is about 40,000 rupees. So 3 to 6 years, we saw about 52,000 or close to 60,000. So more than 6 years, we saw about 70,000. So as they grow in the system, as they start borrowing more and more cycles, the ability to borrow and pay back increases. That is clearly visible that way. So I think as the industry keep maturing and going longer and longer, you will see certain percentage will borrow more, their cash flow is more, that business is grown, the repayment capability is more. This is what I was telling, that outliers majority comes from this segment, high cash flow or high vintage, these two.
Sure. I think in the interest of time, I think that was the last question that we've taken. So, I mean, the gentlemen are always available offline to converse. So with that, we'll end the session, but Preeti, if you just want to give the vote of thanks. Yeah.
Thank you so much for that insightful discussion, Mr. Hebbar and Dr. Misra, and of course, Anand. We have a small floral memento for you. May I request Mr. Krishna Kumar Karwa and Mr. Sheth to please come and do the honors. Let's give them a round of applause, everyone. Thank you, everyone, and we can proceed to our meetings on the other floors. Have a good day ahead.